Hey guys, I'm Justin Boggs, the co-founder of Marketplace Valet. We help brands optimize and operate on Amazon. Since 2006, we have over 417,000 reviews as a seller. I'm here to discuss all things Amazon, solve problems, and answer common questions. Today's video is about breaking news, 90-day tariff extension, and what it means for sellers. Let's get into it. Breaking tariff news for Amazon sellers. A new executive order has been signed, extending the current tariff pause for another 90 days. Earlier this year, tariffs surged to as high as 145%, significantly impacting businesses importing from overseas. That situation eased when rates were pulled back to 30%, a 10% base tariff, along with an additional 20% category-specific tariff. With today's announcement, those reduced rates will remain in place for the next 3 months. The purpose of this extension is not simply to freeze tariffs, but to provide more time for trade negotiations. In particular, the United States has been pushing for increased purchases of American agricultural products, such as soybeans, by China. While the pause may ease immediate pressure, it is unlikely to serve as a long-term solution. Further developments will depend on how negotiations unfold in the coming months. For Amazon sellers, the practical impact of tariffs is uneven. While US-based sellers often feel the financial strain, many Chinese sellers on Amazon's marketplace appear largely unaffected. There are several reasons for this. Some overseas sellers report artificially low manufacturing costs, which minimizes the impact of tariffs when calculated on declared values. In addition, profit margins can be significantly thinner while remaining viable due to differences in currency value. A single US dollar carries more buying power in China than in the United States, allowing overseas sellers to sustain lower pricing strategies. This dynamic is why tariffs do not necessarily reduce competitive gaps between domestic and overseas sellers. Even when applied, many sellers outside the U.S. maintain their pricing without noticeable increases, putting pressure on domestic businesses to adapt. Replaces. Economists have suggested alternative approaches, such as adopting purchasing power parity, which would equalize the real buying power of currencies rather than relying on direct exchange rates. However, such measures would require broad cooperation at both governmental and platform levels, making them unlikely in the near term. For now, the 90-day extension provides sellers with short-term relief. It creates a valuable window leading into Q4, allowing businesses to import and stock holiday inventory at current tariff levels before any potential changes. The outcome beyond this period remains uncertain, but for the immediate future, sellers should take advantage of this extension to secure supply chains and prepare for peak season demand. If you have any questions or need help growing your brand on Seller Central, feel free to check us out at marketplacevalet.com. Like and follow us for more helpful Amazon content. Thanks for watching this video.